Can you afford to buy a home in 2025 on an $80,000 salary? The short answer, yes, if you know how to play it smart. But don't just take my word for it. Today, we're diving deep into the real numbers, the lender calculations, and even tips to stretch your buying power. Whether you're looking at starter homes or just wondering if it's even possible in today's market, this video is your roadmap. Hey, I'm Pauline Lee, a mortgage broker and real estate agent. I help people like you make smart, affordable moves into home ownership. So if you're wondering, can I really buy a home this year? Let's break it down. First, how do lenders determine how much house you can afford? We look at something called your debt-to-income ratio, or DTI. That's the percentage of your gross monthly income that goes towards debts like your car payments, student loans, and of course, your future mortgage. In general, lenders want your total monthly debt to be around 36 to 45% of your gross income. Let's do the math on $80,000 per year. That's about $6,666 a month before taxes. 40% of that is roughly $2,700 a month. That could go towards all debts, your mortgage, car loan, credit cards, etc. Now let's look at two scenarios, one with little to no other debt and one with some existing monthly obligations. If you don't carry any debt at all, $2,700 can go towards the mortgage payment. You might qualify for a home around $360,000, depending on taxes, insurance, and interest rate. In this scenario, I'm assuming 6.75% rate and a 5% down payment. Here's the monthly payment breakdown. Compare this to a scenario with some existing debt, for example, $500 a month. Now your available budget drops to $2,200 a month, which means a home price closer to $300,000. Here's the monthly payment breakdown. If you're watching this and wondering, where do I fall in this range? Let's talk. Every buyer is different, and I offer a free one-on-one consultation to help you figure out your professional affordability number. Just click the link in the description to schedule your free homebuyer affordability call. Your salary is just one piece of the puzzle. Here are 4 things that can change how much house you can afford. Your credit score. Higher scores get you lower interest rates, which gets you more buying power. Down payment size. 3% down, 5 or 20% down. How much savings you have to contribute towards the price obviously impacts your loan amount. Loan type. FHA, conventional, or VA loans all have different limits and guidelines. Location. Property taxes and insurance vary city to city, and that changes your monthly payment. And if you're buying a condo, we need to factor in those HOA fees. Want to increase your buying power? Here are 3 quick tips. Pay down high interest debt. Your DTI or debt to income ratio calculation will thank you. Boost your credit score. Aim for 680 plus, if you can, to expand your mortgage options. Look into local down payment assistance or first-time homebuyer grants. I can help you identify and if you qualify for programs. So here's the big takeaway. If you're earning $80,000 a year, home ownership is absolutely within reach in 2025. It's not about guessing or stretching yourself too thin. It's about knowing your numbers, using the right loan programs, and having a guide by your side to make it all happen. That's what I'm here for. If you're ready to find out your personal affordability number and what homes you can comfortably buy, I'd love to help you map it out. Tap the link below to schedule your free buyer planning call. I'll walk you through the steps and get you a clear plan. If this video was helpful, give it a thumbs up. Hit subscribe for weekly mortgage tips and drop a comment if you have any questions. I respond to each one personally. Thanks for spending a few minutes with me today. Don't forget, buying a home isn't just about the price tag, it's about creating a place you love and can truly afford. I'm Pauline Lee, a licensed mortgage broker and real estate agent. Connect with me for a consultation. I encourage you to get pre-approved.